And joining us now is Beary, Washington correspondent of Europolitics Affairs Daily Magazine, based out of Brussels. Thank you and welcome to BizAsia America. Let me start with the European banks because we spend a lot of time on, obviously, the U.S. banks and the Asian banks, but we haven't had a real update about the state and the health of European banks ever since this whole crisis began. How are they doing?
Well, European banks are pretty fragile at the moment. More or less the same way the European economy is. As the US economy has picked up with 2 or 3% growth expected, the European economy is still flatlining on zero. And the banks are a big part of that. They're less capitalized than the American banks. And there's also a huge range of structural reforms that they are undergoing, which are even more radical than anything that has been going on in the United States, for example.
This health of the banking system, they've injected, first of all, a significant amount of capital from when they were just a few years ago. Hasn't that helped decrease the leverage and increase the health of the entire system?
It has, but it's a slow and painful process because they were in just such a huge hole. And the entire economy was just plunged into a much deeper recession. And even though they are doing the right things, the IMF last week did a scorecard on Europe, and they basically said that Europe was doing the right things structurally, the governments, but they still are not getting growth yet. The situation was so bad.
What's the problem? Is it an economic problem or is it a banking problem?
Many would say it's a political problem. They are just putting in place structures like a bailout fund at a Europe-wide level, or a resolution mechanism, what they call a Bailin Fund, whereby the bank creditors rather than the taxpayers create the fund. They're doing all these things at the same time, and it's taking time. And confidence in the meantime is still very low. And as confidence is low, there's less lending going on, and there's less economic activity. So it's still struggling to get out of the.
Where is the worst part? Is it Greece? Is it Portugal?
The problem with Europe is it's only as strong as its weakest link, in a way, because of the single currency. And you still have independent countries. So once you fix one problem, they fixed maybe the problem in Ireland with a bailout, then you'll get a Greek problem, then you'll get a Cypriot problem, then you get a Spanish problem. But certainly it's the peripheral countries that are the weakest links at the moment. And they are surviving with their bailouts, and they are making progress, but the growth has yet to return to the economy.
The ECB has played a major role in trying to get these banks sort of on the same page, and one of the issues they're trying to do is have this fiscal union where all the banks in Europe abide by similar rules. What's the latest on that?
The ECB has been hugely important in bolstering the banks and preventing a complete collapse of the system. In addition to their typical policy of, with interest rates, they've also created a mechanism called outright monetary transactions, which are basically huge cash injections into the bank system. And the banks have stabilized because of that. The IMF has praised that policy, but at a certain point, the banks have to be able to look after themselves, and people are beginning to wonder, when is that going to happen?
So I get you're not too optimistic about the banks in Europe. Is there something they're doing right? That you're happy with?
They're slowly getting to the capital levels that they should have always been at. And that's a positive thing, but the confidence is just very slowly returning.
Okay, let's hope it continues at least in the right direction. Beary, thank you very much. Europolitics journalist based out of Brussels.